Hi, this is Shelley Kraft. We're coming to you live on SNNLive. We're at the Cambridge House International World Resource Investment Conference here in Vancouver, June 2013. I have with me David Morgan, the Morgan Report. He's a speaker, silver-investor.com. Ladies and gentlemen, let's find out what David Morgan has to say. How are you, David?
Shelley, I'm great. Thank you for having this interview with me.
It's good to have you. So, what are you speaking about at this conference?
I'm speaking about silver, the market ahead. What most people might not know is that, one, the biggest question, I think, is the silver and gold market over? You see a lot in the mainstream press about bull market's over, move into equities. You kind of hear that almost daily. And the bull market is not over. In fact, what really took place in the last bull market was gold went from basically the $35 fixed price to almost $200, down to $100. It took about 3 years for it to get back up to $200. And at that time, a lot of people said it's still over, it's a double top. That's not what happened. What happened is it went from 200 to 850. So it almost went up five-fold, 4.5-fold from that point, from the previous old high. I think we're going to witness something very similar this time. Going back to the previous bull market in silver, it was even more spectacular. If you were in the silver market from the time that we went on the fiat standard, where we took the silver out of the coinage in 1965 and bought silver at the monetary price of $1.29 per ounce and held it all the way to the beginning of 1979, you would have made $1.29 to $6. So you would have made roughly 5 times on your money. But if you were a speculator or timer or just plain lucky, and you bought silver at the beginning of 79 at $6 an ounce, it went to 50 January 1980. So in 1 year's time frame, the market went up from 6 to 50, an 8-fold increase, where it took almost 15 years to get a 5-fold increase. So I've been prominently saying that 90% of the move comes in the last 10% of the time. I've got the facts, I've got the figures. Now, does that mean that the next market is going to repeat? No, it doesn't. But it does mean that this bull market is not over, and the best move is ahead of us. It's going to be strong, it's going to be hard, and most people aren't prepared for it.
Good point. Now I'm going to talk to you like a guy, like just me and you together. So we're sitting in a Wall Street conference room, and I'm saying to you, wait a minute, there's a bull market in equities, and we're still in a bull market in resources, certain resources at least. What's that rotation all about? When does it go back from equities? When do they come out of these tops in, obviously, the New York Stock Exchange Dow Jones Industrial Averages, trading at heights that hasn't been seen in years? Standard & Poor's, rocking. When does that money begin to flush out and start to trickle down, not only to the commodities, but also to the juniors?
A great question, and the answer is I don't know, and no one else does either. But let me just reflect on it and say this. Gold is the most negatively correlated asset to the stock markets, and this is what we're seeing right now, right here, June 2013. Money's moving out of gold and moving into equities. That makes sense. Gold and equities go the opposite direction. When will that peak out? I actually think we're going to peak out probably this year, Shelley. I think that the equities are overdone. They're overvalued in any metric you want to use. And I think it's one of those things that you see at the tops of most markets. A lot of job owning, a lot of feeding frenzy that comes on the mainstream financial press. People are willing to overpay for something that really doesn't have the value that they're paying for it. And I don't think it can last out the end of this year. So if I'm correct, what that implies is that 2014 is where you're probably going to see the switch over, where you're going to see gold start to move back up and the equity market starting to come down.
What about the juniors? I don't want to leave them out, because let me tell you, they are left out right now. And there's been a big flesh out of all of those, not all, but a lot of them. So let's talk about them, because we're at a conference that caters to them. Yeah. So let's give them a little time.
Sure. Junior market is probably one of the most difficult, yes, the most exciting sectors to be in. I mean, this is not what I specialize in, but yet it is probably where I spend the most of my time. Why? Because it's really hard to find value. I just did one for the Morgan Report Mastermind series. This company has a market cap of $12 million. It has $10 million in the bank. You're basically buying this company for cash, for the cash value it has in the bank. What's its asset base? Over 20 million ounces silver defined by a 43101 and 100 million ounces silver equivalent. They're getting that basically for free. That's a junior company. That's a company very few people know about. There are those opportunities here. You got to be able to ferret them out. Are all the companies here going to last the next 3 or 4 years? Probably not, in all honesty. Nonetheless, there are values, like I just stated, all over the place here. So you really have to do your homework, or you get publications or research that gives you the information you need to make a sound decision, and you spread out. You don't want to buy just one company no matter how good the story. You want to get, I would say, a minimum of 5, preferably 10. Put in speculative capital, and these are the kind of companies that can make you a lot of money. You have to get in and have a good attitude about it. To think you're picking the very, very bottom, no. It's bottoming here. It's a good time to get in. Can they go lower? Yeah, they might go a little lower, but looking back 3, 4, 5 years out, you're going to say, my goodness, and you'll be bragging about what you bought some of these companies for in the future. I'm certain of it.
So guys like us don't pick tops and bottoms. If we're close, we're good, correct?
That's right. No, any professional wants to get within 20% of the bottom and 20% of the top. And even if you can do that, you're considered to be very, very good. Certainly, I've called the tops on the silver market pretty much all the way up so far. Doesn't guarantee I can do it again. My bottom picking hasn't been as good. And yes, we don't strive to pick the top or bottom. We do our best. We make our calls. Some are right, some aren't. But again, you want to be a professional. So that means as things are bottoming, you start buying. As things are topping, you start what's calling distributing or selling out. And that way you know that you're getting a higher price than you paid, so you've made a profit. And you don't sell it all because you know that perhaps it's going to go higher.
So if you want to find out what company had a 12 million market cap with 10 million in cash in the bank, you have to go to the following website to find out.
TheMorganReport.com. All one word, TheMorganReport.com.
You heard it here second. Because you heard it on TheMorganReport.com first. Ladies and gentlemen, David Morgan of The Morgan Report. He's a speaker, and he is obviously the silver guru, no question about it. Silver-investor.com is another website. I'm Shelley Kraft. This is SNN Live. We're at the Cambridge House International World Resource Investment Conference, June 2013 in Vancouver. David, always a pleasure to see you.
Thank you, Shelley. Always a pleasure for me.
You're welcome. Thank you.